Welcome back to the Chicago Deal Flow Deep Dive. Today, we're going to be taking a deep dive into bridge loans in Chicago's commercial real estate market.
Sounds good.
And we are going to be taking our cues from an article by Michael Linton. He's got over 38 years experience as a commercial real estate broker in Chicago.
Wow.
Yeah, pretty impressive. He's got a ton of information on his website, chicagodealflow.com. So definitely check that out if you want to learn more.
I will.
So maybe to kick things off, you can tell us what exactly are bridge loans.
Sure. So a bridge loan is a short-term financing solution.
Okay.
It provides quick access to capital when you need it most.
So, like, when would you need it most? What kind of situation?
Michael Linton actually describes bridge loans as a way to bridge the gap
Okay.
between the need for immediate funding, like let's say you need to purchase a property, and securing long-term financing, like a traditional loan from a bank.
Gotcha. So I guess that makes me wonder, like, why is speed so important in Chicago? You know, in Chicago's real estate market, is it really that competitive?
Yeah, it's really that competitive. I mean, think about it this way. You have a hot property come onto the market in a neighborhood like Fulton Market or Pilsen. Investors are going to be very hungry. They want to move quickly, right?
Yeah.
But a traditional bank loan can take months to process.
Oh, wow. Okay.
So in that time, somebody else could easily snatch up the deal.
So bridge loans kind of help you avoid that.
Exactly.
Get in there quickly.
Yep.
Makes sense. Michael Linton, he also talks about flexibility as a key advantage
Great.
of bridge loans. Can you talk more about that?
Yeah. So he basically says that bridge loans can be tailored to a lot of different needs, not just buying a property.
Okay.
So maybe you need to renovate a building to attract new tenants.
Oh. Okay.
Let's say you have a property with some upcoming tenant transitions that could impact your cash flow. A bridge loan can provide that financial cushion while you're waiting to secure that longer-term solution.
Gotcha. So it's kind of like this really versatile tool
Yeah,
that can be used in different scenarios
it really is.
throughout a project's life cycle.
Yeah.
And I think that's especially valuable in a city as diverse as Chicago, right? I mean, it's got so many different neighborhoods and all sorts of real estate dynamics at play.
For sure, every single submarket across Cook County has its own rhythm.
Oh, interesting.
A bridge loan can really be that adaptable resource you need
Yeah.
to navigate all the different challenges and opportunities,
Okay.
whether you're in a rapidly gentrifying area or a more established market.
So that makes a lot of sense. Michael Linton also uses this phrase, opportunity capitalization.
Yes.
What does he mean by that?
So think of it like you're a value-add investor. You see some potential in an area that's up and coming,
Okay.
like maybe Bronzeville, but the property needs a little bit of work to really make it shine.
Okay, yeah.
A bridge loan can give you that initial boost, allowing you to get that property and improve it
Okay.
before the competition comes in.
I see. So it's like a way to jumpstart the process.
Exactly.
Get ahead of the game.
It allows investors to move quickly
Yeah.
and take a risk.
And speaking of risks, I'm curious, bridge loans, you know, they're not without their own complexities.
Of course.
Can you maybe shed some light on the typical terms and features that investors should be aware of when it comes to these loans?
Of course. Yeah. So Michael Linton actually breaks down some of the key features.
Okay.
And the first one is that they're short term. We're talking like 6 to 24 months,
Okay.
and they can be extended to 36 months.
Gotcha. So it depends on the size of the project.
Exactly.
And what about the interest rates? I imagine those are a little bit different than what you might see with a conventional loan.
Yeah. So because they're short term
Okay.
and there is that higher risk involved,
Makes sense.
bridge loans do have higher interest rates.
Okay.
You're typically looking at a range between 6 to 15%.
Wow. Okay. That is a significant difference.
It is.
All right, so higher risk equals higher cost of borrowing. Makes sense to me. I've also heard this term loan to value, or LTV, thrown around a lot in real estate.
Yes.
How does that play into bridge loans?
So loan to value is a really crucial factor.
Okay.
It basically represents the ratio of the loan amount to the appraised value of the property.
Okay.
So for stabilized properties, bridge loans in Chicago, they often have an LTV of 70 to 75%.
Yeah.
But if there are very attractive projects or borrowers with strong financials, that LTV might go as high as 80 to 85%.
So the more confident the lender is in either the project or the borrower's ability to repay, the more they're willing to lend out, I guess.
Exactly.
Okay. And what about the actual repayment structure? How does that work with the bridge loans?
Sure. So most commonly, bridge loans have interest-only payments
Okay.
throughout the term of the loan, and then a balloon payment at maturity. So you would just make monthly payments that only cover the interest,
Okay.
and then the entire principal amount would be due at the end of the term.
Got it.
Now, some lenders might require partial amortization or reserves,
Okay.
but interest only with a balloon payment is the standard setup.
Gotcha. Okay. Well, that's a lot of information
Yeah.
about bridge loans.
Yeah.
Let's shift gears a little bit and talk about how these features translate into real-world applications
Of course.
right here in Chicago.
Yeah. Let's get into it.
That's where it gets really interesting. But first, a message from our sponsors.
Sounds good.
We'll be right back with more from the Chicago Deal Flow Deep Dive.
Stay tuned.
Okay, we are back and we're talking about bridge loans
Yes.
in Chicago's commercial real estate market. So, we're really starting to dig into these real-world applications of these loans, and I'm really curious to hear how this all plays out in this, pretty dynamic market.
Sure. Yeah, there's so many different scenarios where these loans are really valuable.
Yeah.
Like, for example, you have a developer that wants to acquire, a really prime property in a really competitive area like River North.
Oh, yeah, I can only imagine the bidding wars there.
Oh, yeah, it's really cutthroat.
Yeah.
And so a bridge loan can really help someone win those battles.
Well,
Say a property comes on the market and a bunch of investors are vying for it.
right.
A smart developer with a bridge loan,
Yeah.
they can act really quickly and get that deal closed.
So it's not just about having the funds.
Right.
It's about having those funds available immediately.
Exactly. It's about speed and agility.
Wow.
So, yeah, bridge loans give you that leverage
Makes sense.
to get those opportunities as they come up.
So beyond acquisitions,
Hmm.
what about renovations
Right.
and repositioning? I mean, this is an area I'm really interested in
Yeah.
because, you're kind of breathing new life into these properties.
It is fascinating. Imagine an investor buys an office building in a really nice suburb like Evanston
Yeah.
or Oak Park
Uh-huh.
that maybe needs a little updating.
Right. It needs a little love.
To attract those high-quality tenants,
Yeah.
a bridge loan can help cover those costs and
All right.
make that property more desirable and profitable.
So you're taking something that has a lot of potential. And
Exactly.
you're really maximizing that.
Exactly.
So are there any other scenarios where bridge loans are
Yeah.
particularly useful in Chicago?
Oh, yeah, definitely. I mean, think about new developments, like out in the suburbs in office markets like Schaumburg
Okay.
or Downers Grove,
Okay, yeah.
where a developer builds a new building,
Uh-huh.
but they're waiting for tenants to sign leases.
Right.
Cash flow might be a little tight.
Yeah, definitely.
So a bridge loan can help with that.
Okay.
It can cover those expenses until that rental income is steady.
So it's like a safety net in a way
It is.
during those early phases of the project
Exactly.
before everything is kind of,
Up and running.
settled.
Boring.
Yeah, exactly.
Yeah.
So, we talked earlier about how Chicago's market is so diverse.
Mm.
Every submarket has its own, unique dynamics.
For sure.
Does that affect how these bridge loans are actually used?
Oh, absolutely. A strategy that works in the West Loop
Uh-huh.
might not work in Aurora or Joliet.
Oh.
Yeah. So understanding those nuances of each submarket is super important for investors considering bridge loans.
Okay.
Like in a gentrifying area,
Yeah.
a bridge loan might be used to buy and fix up a property before the prices really go up.
Gotcha.
Whereas in a more established market, it might just bridge a short-term gap
Okay.
while someone is trying to get a long-term loan.
So local expertise is really important here
It's essential, yeah.
when it comes to navigating these bridge loans.
Definitely. And a lender that's familiar with Chicago,
Yeah.
they can be really helpful for an investor,
Okay.
guiding them towards using these loans strategically.
Okay, well, speaking of success,
Right.
Michael Linton also talks about using these loans for distressed properties.
Yes.
So how do those two things connect?
Okay, so according to one report,
Uh-huh.
there were over $22 billion
Wow.
in non-accrual loans
Okay.
in the first quarter of 2024
Okay.
across Cook, DuPage, and Lake counties.
Wow. That is a lot of money.
It is a lot. And so these non-accrual loans,
Yeah.
they're essentially loans that are behind on payments.
Oh, okay.
And then those properties become distressed.
So that creates some opportunities, I imagine.
It does. For those investors that specialize in turning around distressed assets,
Right.
they can use a bridge loan to buy those properties quickly
Okay.
at a good price, hopefully, and they can use that loan to fix them up and really increase the value.
So it seems like everyone benefits in that situation.
Exactly.
The lender, the investor, and the property.
It's a win-win for everybody.
Sounds like it.
It really shows how versatile these bridge loans are.
Yeah.
Especially in a complex market like Chicago.
That makes sense, but, bridge loans aren't without their risks and challenges. What are some things that investors should keep in mind?
Yeah, that's a really good question. They can be powerful tools,
Yeah.
but you have to be careful. Michael Linton talks a lot about having a clear exit strategy.
Oh, yeah, that makes sense.
Yeah, you need to know how you're going to pay back that loan.
Right. Because it is short term.
Exactly.
You got to have a plan in place.
Exactly. And that could involve refinancing
Okay.
or maybe selling the property or securing additional funding from somewhere else.
So it's like you have this roadmap in place, from getting that initial loan to that,
Your final goal.
yeah, your end goal.
Exactly. And without that, borrowers could be in a tough spot
Yeah.
when that loan comes due.
When the bill comes due.
Exactly. Another thing to think about is interest rate changes.
Oh, yeah.
Yeah.
It always comes up in finance.
Always.
So how do those impact these bridge loans?
So remember, bridge loans have those higher interest rates
Yes.
than conventional loans.
Right.
And they can change based on what the market is doing.
Yeah.
So if they go up during the term of the loan,
Uh-huh.
the borrower might have to pay more than they thought.
Oh, okay.
And that could affect their profits.
So it's not just about getting the loan.
Right.
It's about paying attention to, how those rates might change.
Exactly. You have to stay informed
Yeah.
and be flexible
Okay.
to deal with the changes in real estate finance.
This has been so informative. I feel like I'm learning so much
Good, I'm glad.
about bridge loans in Chicago.
Yeah. It's a really interesting financing tool.
It is.
And I enjoy, helping people understand it better.
Yeah, I think it's really helpful for people to understand all these details.
Yeah.
So we've covered a lot today. We talked about the basics of these loans,
Yes.
the different ways they can be used in Chicago,
Uh-huh.
and even some of the risks involved.
Definitely.
So before we wrap up, I want to leave everyone with one final thought.
Okay.
Imagine you're an investor and you have this amazing opportunity to buy a prime property
Okay.
in a Chicago neighborhood that's really on the rise.
Huh.
But you got to move fast,
Uh-huh.
and traditional financing would just take way too long.
Yeah.
Could a bridge loan be
Oh,
key
yeah.
to getting this deal and really capitalizing on the way the market's moving?
Absolutely. I mean, it really highlights
Yeah.
how powerful bridge loans can be,
Yeah,
especially in a market like Chicago.
for sure. So if anyone's looking for more information on Chicago real estate,
Yeah.
Michael Linton is a great resource.
Definitely.
Check out his articles on chicagodealflow.com.
I will.
He really knows his stuff.
He does. He's got a ton of experience.
Yeah, when it comes to using bridge loans strategically.
Yeah, he's seen it all.
So that about wraps up our deep dive into the world of bridge loans.
That does.
We talked about the basics, the different ways they can be used,
Right.
and even some of the risks and rewards.
Yeah.
Hopefully everyone listening, has gotten some good insights
I hope so.
that they can use for their own investments.
Yeah.
It's been great having you on the show
It's been a pleasure.
to help break down these financial tools
Yeah.
and, really show how they work in the real world.
Yeah, it's fascinating stuff.
It is. Thanks for tuning in to the Chicago Deal Flow Deep Dive.
Of course.
We'll be back next week with another topic
Okay, sounds good.
from the world of Chicago real estate.
Can't wait.
Until then, happy investing.